All right. So NM 9.5, page 104. That is our current, that is today's agenda. And 9.6 is going to be your homework, which is very much similar to 9.5. So take 2 minutes and go through the entire question, and then we will start discussing it. And I will do it. You don't have to copy it. If you want to do it, fine. I will share the PDF anyway. So just go through it in 5 minutes, and when you have read through the information, then I will ask you a few questions, and then we will start with this question. So once you have read the information, give me a green check. I'm waiting. Go through the required section as well. And once you have read through it, then a green check on the feedback window. Maheen has read. Good. All right. All right. Madiha and Iman, once you're done. Good. Okay, all read the question. So our depreciation policy, that's the two key areas that you all need to be very careful about. Like the depreciation policy. Do we understand depreciation policy is reducing balance method? That means we will be calculating net book values before we apply 40%. And the full year depreciation charge. Full year depreciation charge means no more month by month calculation. If an asset is used part of the way through a financial year, we are not going to calculate, we are going to ignore the number of months of its usage when it was bought or when it was sold. So we understand that our depreciation policy, it will be based on net book value 40%, and we are going to ignore the number of months of usage since it says it's a full year depreciation policy. And that means if an asset was bought part of the way through the year, so we are going to ignore the number of months for it was for what it was used for. And if an asset was sold part of the way through the year, we are going to ignore the usage of that asset before it was disposed of. Please give me a green check if you understand full year depreciation policy. Amal, we don't? Very good. And the second thing is the financial year. Do you agree that this particular question, unlike the previous one, 9.3 की बजाय जैसे 9.3 एक we were to sort of make accounts for 3 consecutive years, this question does not ask you to make 3 consecutive years answer. You are only required to show accounts for 1 year only. So we are not going to make those big accounts. We are going to make smaller accounts because 1 year's transactions are very few. So just 1 year, and our financial year begins on 1st of July 20x7 and it finishes 30th of June 20x8. So before we start with the question, let me just draw a small timeline because that is what we are going to follow. This is our financial year. We start 1st of July 20x7 and we finish 30th of June 20x8. And over here probably we had 1st of October 20x7 x7 में हमने 10,000 की additions की थी, and over here maybe 3 months before, 31st March, yes, 31st March 20x8 में हमने disposals किए थे. So if you agree with this timeline, just give me a green check because that is very important to place these events in your mind जहाँ से वो belong करते हैं. सो फाइनेंशियल ईयर X7 से X8 पे चेंज होगा, दैट डज नॉट मीन कि आपका फाइनेंशियल ईयर चेंज हो गया. इट्स द सेम फाइनेंशियल ईयर. द कैलेंडर ईयर हैज चेंज फ्रॉम 20X7 to 20X8. It's the same financial year because we know the starting point and the end of our current financial year. So Fajr and Iman Badr and Madiha, we don't understand this, right? All right, good. And the best way to deal with a question like this, that jitne bhi accounts hain, you should make them simultaneously. Don't wait for one part A to complete and then starting part B. No, we are going to deal with part A, part B, and part C simultaneously, क्योंकि उन सब की entries आपस में connected होंगी, तो उनको हमें साथ साथ बनाना होगा. लेकिन part D is a different part. It has nothing to do with the accounts making. The part D actually means that you have to show it how they would appear, whatever you have recorded in part A, B, C, how would they appear in income statement and balance sheet. So we are going to deal with part D later on, but part A, B, and C, we are going to deal with together. So that's how we are going to start. So part A is where we have to show motor vehicles account, right? That's the vehicles account at cost. And this is our provision for depreciation account. Provision for depreciation account for vehicles, right? And this is going to be our disposal account here, part C. So part C here, that's our disposal account for vehicles. So, and we do not have to make any depreciation schedule over here. The reason is, unlike 9.3 and 9.4, 9.3 and 9.4 में आपको डिप्रिसिएशन स्केड्यूल बनाने से काफ़ी हेल्प हो जाती है, क्योंकि आप नंबर वन मल्टीपल ईयर्स के साथ डील कर रहे होते हैं और दूसरा आपको ट्रांजैक्शन हिस्ट्री साइमल्टेनियसली देखनी होती है. यहाँ पर हमें सिर्फ एक साल के अकाउंट्स बनाने, एंड वी डोंट हैव टू वरी अबाउट द ट्रांजैक्शन हिस्ट्री because we are already given the starting points in each account. You can see right in the beginning of the question, you are told that 1st of July 20X7, you had the balance brought down on motor vehicles account 180,000 and the balance brought down for provision for depreciation $60,000. So if I place them like this, balance brought down $180,000 here. That is July the 1st, 20X7, and balance brought down July the 1st, 20X7, balance brought down here as $60,000. So give me a green check if we understand placing these two values over here. The starting point is 1st of July 20X7, and in double entry system, the starting point is simply the balance brought down. So if you do understand the placing of these values, then give me a green check, Amal and Mehreen. Amal, can you hear us? Okay, good. And do you agree with the arrows here? Since vehicles account has a default debit nature, so debit side means increase and credit side means decrease, and provision for depreciation account is a credit natured account, so credit side will represent an increase and debit side should represent a decrease, right? Give me a green check, please. If we have any issues over here, then a red cross, right? Fajr, right? Fajr, okay, right. Now, the very important thing, maybe with some experience you will understand it yourself, but let me just identify. If this $60,000 is not given, right, then you must make a depreciation schedule. Basically, what do we mean by the balance brought down here? The balance brought down here tells you that on 1st of July 20x7, the total accumulated depreciation from the previous years is $60,000, right? From the previous years. The emphasis is on previous years. So अगर हमारे पास ये $60,000 की value ना दी होती, तो we were probably required to calculate this balance brought down. And that balance brought down means we need to have the transaction history. That means we need to know, okay, how many vehicles are there in existence and how many times they have been depreciated in the past years. So जब भी आपको past year से transaction history के through depreciation total calculate करना होता है, then the best way of doing that is to prepare depreciation schedule like what we did in 9.3 and 9.4. But since this $60,000 is already given to us, so there is no need to explore the transaction history. We already know $60,000, so there's no need to go back. And that is why in this particular question, we will not be needing any depreciation schedule here. So do we understand when do we need to make the depreciation schedule? Whenever we are missing the depreciation transaction history, we should preferably be making a depreciation schedule because that is the safest method to provide you with an error-free, in an error-free manner, it will provide you with a total depreciation charge. So if the transaction history is needed, then you make the depreciation schedule. If it is not, sorry, if it is not required, the transaction history needs not to be considered because the starting point is already given. There is no need for making that extra depreciation schedule. You can save that time and spend it on something else in your exam question. So give me a green check if we understand when do we need to prepare a depreciation schedule and when we need to ignore it, and we can save time on that. Fajr? This balance brought down is the key. If it is given, we don't need to make a depreciation schedule. If it is not given, then we are required to calculate it. That means we will be needing the history of transactions. Very good. All right. Now we are going to go through the events one by one, and we're just going to complete the double entries over here that will sort out this question. So what are the events which happened during the year? Transactions occurred during the year 30th of June 20XA is we bought one new vehicle from Ken Nicholson on 1st of October, and the cost was $20,000, but we only paid one quarter, 25% for that, and the remainder was on credit. So bank 5,000. You can write cash if you want to, and K Nicholson $15,000. The date being October 1st, 20x7 for these two transactions. So if you agree that we will choose the debit side of the vehicles account because we're buying the vehicles, our vehicle account balance is increasing, so we are going to debit the vehicles and we will credit bank account and K Nicholson's account with these amounts, then give me a green check, please. Very well. All right, so the easier part is done. Comes the disposal. 31st of March 20x8, there was a disposal. We sold one of our existing van, and dates are obviously very important, right? 1st of July 20x5 was the date when we bought this van for $16,000, and we sold it in the current year for $5,400, and we sold it on credit to Wilson & Wilson. And before we proceed with 5,400 value, we understand from our previous class that we must update our existing permanent records. These are our permanent records. The vehicle account and the provision for depreciation account, these are our permanent accounts. They will continue to exist over the years until all the vehicles have been disposed of. If you have vehicles in existence, these two accounts will always be there in your ledger. However, disposal account is not a permanent account, it's a temporary account. It will come into existence only when needed, and in this case, it's needed for the purpose because the purpose is that we are to calculate profit or loss on disposal. So we will have this disposal account only coming to existence when it is needed. So now since disposal has taken place, so we will need one. And the first thing we do is we fix our existing records. And how do we fix it? We know that whatever asset that we have disposed of, it is being reflected in these opening balances. And we need to eliminate the records or the traces of the vehicle which we have disposed of, and it no longer belongs to us. So we need to subtract a value from this $180,000. Can you tell me which value should be subtracted from this $180,000 here in the chat box? A certain value needs to be subtracted over here because the asset has been disposed of. So we choose the credit side over here, but we need to decide on a value. Which value should be subtracted over here? Maheen says 16, Asma says 16,000, Alina Waqas 16,000, Fajr says 16,000. Any other ideas? Madiha 16,000, very good. Anyone else? That is the correct answer, very well. Alina Sayed 16,000, very well. Very well done, Alina. Acha, sorry. Okay, so $16,000 is what we need to subtract. We need to subtract the same value which was previously been included in that. And since this account is at cost, so obviously previously भी इसके अंदर cost की value include हुई थी, और now since we have to subtract a value from there, so we are going to choose the same $16,000 and we are going to transfer it to the disposal account. Right, transfer to disposal account, and this value will be transferred on 1st of March, no, 31st of March, 31st March 20x8. Remember, calendar year has changed, but it's the same financial year, right? So this value will be transferred from here to here, because if motor vehicle account is being credited, so the transfer entry must fulfill the double entry aspect. So the other account where it is being transferred must be debited in order to fulfill the duality principle. So $16,000 over here, and we write transferred from vehicles account. The date will be 31st March 20x8. So we understand the first transfer. Give me a green check. Mehreen नहीं समझ आया बेटे? Okay, Mehreen. Since we have disposed of an asset, so obviously your asset account balance needs to go down. So we will choose this side for that disposal. So by what value? The value which was previously reflected in this $180,000. And since this account is at cost, so that means we will subtract the cost of the asset from there. Do we understand, Mary, or not? If not, then unmute your mic and ask me your query directly. Okay, understood. Chalo, good. So the next transfer, so हमने अपना vehicle account तो update कर दिया. अभी हमने अपना provision for depreciation account vehicles का उसको भी update करना है. अब उसको update करने का मतलब ये है कि अगर $60,000 is the balance brought down, which represents the total accumulated depreciation of all the vans which were held at this date, 1st of July 20x7. So we know that a part of our fleet has been disposed of. So we need to subtract the total accumulated depreciation from this $60,000. Total accumulated depreciation for only that vehicle which has been disposed of, which is the $16,000, right? So now we need to know the transaction history. We need to know that how much depreciation must have been charged in the previous years. So when we need the transaction history, we should make a depreciation schedule. But in this case, we don't have to make it for every vehicle. We just have to sort of calculate one vehicle's depreciation. So I'm going to do it over here in workings. So the cost of the vehicle disposed of, cost of vehicle was $16,000, right? That's a sort of a baby depreciation schedule, right? So, and that was bought on 1st of July 20x5, right? So 1st of July 20x5, we had a motor vehicle and we used it for many years before it was finally disposed of on 31st of March 20x8. So when would be the first ever depreciation charge on this? So the first ever depreciation charge must have been on June the 30th, 20x6. And that must be 40% on the net book value, which is not 24,000. Asma, are you sure? Can you calculate 40% of 16,000? How much is 6,400? Yeah, 6,400. That's correct. Thank you, Madiha. Thank you, Asma. And we subtract, what is the net book value? Net book value, 9,600. Very good. Right? Then comes the second depreciation charge, and that must be June the 30th, 20x7, which will be again a 40% charge, but not this 40% is going to be on the book value because reducing balance method is our depreciation policy. So yes, thank you, Asma 3840, and we are going to charge 3840, and now we have our net book value, updated net book value. How much would that be? 5,760. Please अपनी अपनी calculations हर बंदा करे. 5,760. And the third depreciation would have been charged on June the 30th, since we are charging full year depreciation. So June the 30th, 20x8, but we will not charge any depreciation because by the time we reach 30th of June 20x8, the asset ceases to exist because we sold it on 31st of March, right? हमने 3 महीने पहले उसको बेच दिया. So that means, Alina Sayyed, very good, 5760 is the final net book value here. So 5,760 is our final net book value. We will stop charging depreciation after the asset has been disposed of. So this is it. The purpose, this is the mini depreciation schedule that we have been making. So the purpose of this depreciation schedule was to identify the transaction history, and that is why we preferred using this method. And the purpose was to calculate the total accumulated charge of depreciation on the asset that we sold. So what is the total accumulated depreciation for this disposed of van? Anyone? The total accumulated depreciation on this particular van only is going to be the sum of all these depreciations here. 10,240, Alina, thank you. 10,240, Maheen, Asma, thank you. So before I put 10,240 in the accounts, we understand that this third year depreciation will not be charged because our depreciation policy is the full year depreciation policy. And if I read it, the exact expression mentioned in the book, it says it is business's policy to charge full year depreciation on all the assets in the year of purchases and no charge on in the year of sales, right? So since this year was the third year in which the asset was disposed of, so that is why we did not choose to depreciate this year because of our depreciation policy. However, if this depreciation policy were month by month, then we would have charged some depreciation here even in the year of disposal. Or what depreciation हम calculate करते हैं based on the number of months this asset was used before it was disposed of. So we understand there is no depreciation charge here in the final year because of the full year depreciation policy. If we had month by month depreciation policy, then even in the last year we would have charged something here. So give me a green check here, because exam question can there most likely you are going to have month by month depreciation policy. So I wanted to make it a point that you should make a memory note that this situation only exists because of the reason that we have full year depreciation policy. Alina Said has asked a question. In general, yearly depreciation is applied regardless of how many months. Absolutely. Right, Alina. Very good. अमन नहीं समझ आया बेटे आखिरी बात आपका ग्रीन चेक नहीं आया ओके गुड now coming back to the question, so we have 6,400 and 3,840 charged in the 2 years before this asset was disposed of, and the total accumulated depreciation is 10,240. So we need to subtract $10,240 from this $60,000. That means we'll choose the opposite side or the decrease side here, right? So we are going to take 10,240 on the debit side, and just like the previous transfer entry, this is going to be transferred to disposal account, right? The date should be 31st March 20x8, and the disposal entry will be completed. This transfer entry is going to be completed on the credit side of the disposal account. We'll write transferred from the provision for depreciation account 10,240, the date being 31st March 20x8, right? So if we agree with the second transfer entry, give me a green check. Fajr, Acha, Iman Badr. Very good. And in addition to that, we are going to give a small working one reference. This is your working one here. You need to tell the examiner how you arrived at this $10,240. So you will show this small depreciation schedule. So 640 and 3840, that is how you calculated this 10,240, right? Now we are going to enter the disposal value, in this case 5,400, the value for which this asset was actually sold for. And we already know that these two accounts now have nothing to do with your disposed of vehicle, because the relevant figures, the relevant records have already been deleted from these two accounts and have been transferred to your disposal account. So these two accounts have absolutely nothing to do with your disposed of asset anymore. This is the account that is now representing your disposed of vehicle. So any further data related to that disposed of vehicle is going to appear in this account. So $5,400 we sold it for. So bank account will be debited, or cash account, or Wilson and Wilson in this case. Wilson and Wilson's, चूंकि हम इसको credit पे बेच रहे हैं, so the Wilson and Wilson is going to be debited as a trade receivable, and 5,000, not really trade receivable, but receivable, right? A debtor. And the date will be 31st March 20x8. We don't use the term trade receivables for other types of debtors. Trade receivables by definition means people who owe you for goods, for inventory of goods. But this person, Wilson and Wilson, owes you not for goods, but for a non-current asset. So we don't use the term trade receivables for people who owe you for any other reason. So you can call them debtors or other receivables, but not trade receivables. So 5,400 will be on the credit side. So we are done with the events for the year. So up to this point, if you have any question, please unmute your mic and ask, or write in the chat box, otherwise a green check. Yes, Iman Badr and Amal. Amal ka. Okay, Wilson and Wilson, basically, when you sell a non-current asset, you will credit your disposal account, right? And you will debit Wilson and Wilson's account, right? Because this transaction is a credit transaction. You're not receiving any cash or check on this vehicle. You sold it on credit. So this Wilson and Wilson company, they owe you $5,400 for the vehicle. What I explained afterwards is that we should not call Wilson and Wilson as a trade receivable. They are like a trade receivable, but they are not trade receivables because trade receivables is the term we specifically use for people who owe us for inventory of goods. But since we did not sell inventory of goods, we sold a vehicle, a non-current asset, then we should not use the term trade receivable to describe Wilson and Wilson over here, although Wilson and Wilson are similar in nature as trade receivables. We should rather use the term a general receivable or a debtor, but not trade receivable. That's what I explained here. We understand? Or Amal, or do you? Okay, ठीक है, Amal got it. Cross. Okay. And Maheen has asked a question here. We are yet to post this year's depreciation. Yes, of course. अभी हम काम खत्म अभी हमने transactions post किए अभी हम 31st March पे खड़े हैं, right? This was the last transaction we entered. So we haven't reached. We started here, we entered this amount, we entered here. Now we have reached June the 30th. So now we are going to see what happens at the end of the year. So at the end of every year, we do two things. The first thing is, as Maheen has pointed out here, that we should charge depreciation on the other vehicles that we are still using. One of them has been disposed of, but there are some other vehicles that we are still using. So obviously you're going to depreciate those vehicles, number one. And number two, after depreciation has been charged, you are going to close down these accounts. We are going to determine balance carried down wherever we need to determine that. And if an account needs to be closed down by transferring it to the income statement based on its gain or loss nature, we'll do that. But before that, we are going to charge depreciation on the remaining assets. So first of all, we need to know how many assets do we have still. So you can see this is your assets account here. So you have 180,000 to start with, then you have bought another $20,000 vehicle, and then $16,000 costing vehicle was disposed of. So we are going to calculate depreciation first. So 180,000 is the starting value. $20,000 का asset आपने during the year acquire किया था, and 16,000 की cost का asset आपने subtract कर दिया. So that gives you, this is the cost of the assets, right? Which are still being used, which are still in use, right? अगर हमारे पास स्ट्रेट लाइन मेथड होता डिप्रिसिएशन चार्ज करने का, फिर तो हमारा मसला सॉल्व हो गया था, बिकॉज हमने कॉस्ट ऑफ द एसेट चाहिए होती है और वो हम इसका फिगर कैलकुलेट करके निकाल लेते हैं. लेकिन इस केस के अंदर the depreciation policy is not straight line. Depreciation policy is 40% reducing balance method. And reducing balance method means that we need to calculate net book value first before we apply 40%. And how do we calculate net book value? We take the cost and we look for the previous depreciations and we subtract the previous year's depreciations from the cost to arrive at the net book value. So when we look at the previous year's depreciation, this is the relevant account here. That is telling you about the depreciation charges. So previous year's ka total depreciation charge 60,000 tha, but now we know that out of 60,000, 10,240 doesn't belong to us anymore. And we have already transferred this 10,240 from the provision for depreciation account to the relevant account where it belongs. So now what is the depreciation balance here? So you can say it was $60,000 if there were no disposals, but since there was a disposal, so 10,240 should be subtracted from the $60,000 cost, and that is your accumulated depreciation as at the end of the year. So that is your calculation, and now we will calculate the depreciation charge. So if you agree with this equation, this comes out to be how much? $180,000, right? And this comes out to be how much? ये कितना आता है? The accumulated depreciation figure? Can you tell me? 60,000 minus 10,240. This is 49,760. Please do your own calculations, right? Alina Sayed, thank you. 49,760, right? And now 180,000 minus 49,760. And then you take 40% of that. That is going to be your depreciation charge for the current year. How much would that be? How much does it come? Anyone? 180,000, 52096. Please confirm. 529096, Amal, thank you. Let's confirm 52096. Are you sure this is correct? Because this seems like a little off from the we did this. I just did this question in the previous class. Ah, it's 184,000. Yes, that's the error. Sorry. Okay, 184,000. That's true. So I actually just did this question right before this class, so I remember this is not the depreciation charge. So please correct your values and tell me the updated value. Sorry, my fault. Five, yeah, this is a more familiar value, 53,696. So what is this value? This is the current year's depreciation charge on the remaining assets that we are still using at the moment, right? And okay, before we move on to the next stage, 53696. Thank you, Amar. Got it. Thank you, Alina. Okay, 53696 is the depreciation charge for the current year. If you understand this calculation, then a green check, please, quickly, and then I will start posting it in the accounts. Maheen understands, Matiha, Amna, Amal, Alina Wakas, Alina Sayed, and Fajr. Fajr, we don't get it, bete? Fajr does. All right. So now, where do we show this? 53696. This is our current year's depreciation. This is our depreciation account. We are going to choose a side of this depreciation account. And since this is our current year's depreciation, so our overall depreciation or accumulated depreciation balance will increase. So we'll have the end of the year now, 30th of June 20x8. That is when we charge depreciations. The amount is 53696. 53696, and the reference would be income statement because this is your current year's depreciation charge, right? Depreciation for the current year. Sorry, मेरा font size बहुत छोटा है, लेकिन hopefully you can read it clearly. And I am also going to give a working reference here. Working 2. This is our second working. This is our working 2. So you'll be provided spaces for the workings in the exam question paper जहाँ पे भी आप कर रहे होंगे. So आप working 2 इस तरह से ये आपकी working 1 है. This is your working 1. This is your working 2. So you're going to show the workings to your examiners, and when you use these values, you must always give the reference of which particular working you're referring to, because that is going to give examiners a lot of comfort when they are grading your papers. So 53696, we understand this is going to appear on the credit side. Give me a green check if you do, quickly. Yeah, so we okay, all agree. Now, end of the year, the first task was to charge depreciation on the remaining assets. We're done. And the second task is now, final task is that you're going to close down the accounts. So how do we close down the accounts? The accounts with a permanent nature will be closed down by calculating the balance carried down, which will be brought forward in the next year. And that act of calculating the closing balance carried down and bringing it down as the fresh year's balance makes it permanent. So these two permanent accounts will have balance carried down calculated, whereas this account is not a permanent account. This account was an account we needed to calculate profit or loss on disposal. So this account is just going to vanish from the books after you have calculated the profit or loss. So let's start in order. So this is our first account. So the debit side is obviously bigger, $200,000, and the credit side is smaller, 16,000. So we are going to put $184,000 here as balance carried down on 30th of June 20x8, right? And then this balance carried down is going to be shown as the balance brought down following the next year, commencing the next year, sorry. 1st of July 20x8. So you see the calendar year remains the same. It's 20x8. It's just that the closure of one account at the end of one financial year, it just takes the next day to begin the next financial year, even though calendar year remains the same. So this is close down vehicles account, and now we are going to close down the provision for depreciation account. This is also a permanent nature, so 60 plus 53 is 113, 113696. The credit side is bigger, and 113696 minus 10,240. What is the balance carried down here? 113696 minus 10240. Thank you, Asma. 103456. Please confirm this value, 103456. Thank you, Amal. Thank you, Lina. Thank you, Iman Badr. Thank you. So 103456. And this is going to be brought forward just like uh, the other permanent account, vehicles account, right? We'll show it as balance brought down here, right? Balance brought down 103456. So these two accounts are done. Our permanent accounts are done. Now coming to the temporary account, which was created for a purpose, and the purpose was to calculate profit or loss on disposal. So this account, when balanced, is not going to have a balance carried down. So first of all, we calculate the balancing figure. So I think the debit side is bigger, $16,000. The credit side is smaller. So credit side is just 16,000, 15,640. Yeah. So what is the balancing figure here? It will come here, 360 Amal, thank you. 360 Asma, thank you. So 360 here, confirmed. And this will not be referred to as balance carried down. We are not going to write balance carried down over here. That is wrong. Because balance carried down is only going to be used for permanent natured account, which are going to exist from 1 year and will move on to the next year. But disposal account is not going to exist in the next year. The purpose of disposal account is over. We wanted to calculate this $360, and that is going to be transferred to income statement on 30th of June 20x8. So this 360 is representing a profit or loss on disposal. So what do you think? Is this a profit on disposal or a loss on disposal? Excellent. Everyone is saying loss to the disposal, which is the correct answer. Very well done, right? We can justify it in two ways, whether it's a loss or not. The first evidence is from the double entry system. Just tell me in the chat box, income statement यहाँ पे debit हो रही है या credit हो रही है? इस journal entry के अंदर income statement debit हो रही है या credit हो रही है? Amal says debit. Very well done. It's all debit. So income statement जब भी debit होती है वो किसी expense की वजह से debit होती है. Excellent everyone. Excellent Iman Badr. This income statement is being debited. So income statement जब भी debit होती है वो हमेशा किसी expense को represent कर रही होती है. So ये 360 जो है वो आपकी income statement में as an expense, it's going to go there as an expense. So obviously it must be a loss. The other way you can justify this being an expense is to refer the working over here. You can see that you have calculated the net book value of that asset already as $5,760, and that $5,760 worth asset was sold for $5,400. So that means you sold it below its net worth, and that is why it's 360. So you can justify this 360 as a loss either within the double entry system by looking at income statement charge, whether it was a debit or a credit. So it was a debit charge, so that means it's a loss. Or you can simply use the table that you have, that depreciation schedule that you have made. यहाँ से भी आपको hint मिल जाएगा. So this is going to go to the income statement and loss, and this is how we finish the complete procedure. So let me summarize everything in entirety. We start off with the starting point, and in starting point within the double entry system means the balance brought downs. You are usually given the balance brought downs, but in case if this particular balance brought down is not given, then you have another thing coming for you, because that means you will have to make a depreciation schedule for each of the vehicles, and you have to calculate depreciations of their history, and determine this. So luckily, we were given the $60,000. In the exam situations, you may not be very lucky, right? So remember, if this figure is not given, then you need to know every vehicle's existence and how many years it has been used, and then calculate the depreciation charges on each individual vehicles, making that depreciation, that columnar depreciation schedule that we made for 9.3. So in this case, this was given. This value is simple to calculate. अगर ये balance brought down नहीं दिया होगा तो ये आपको बता रहा है simply कि आपकी total cost of all the assets कितनी थी at 1st of July. So you just have to look at different vans costs and add that. So this value calculation is not a difficult task. But this one, if not given, then you're in trouble. That means you have to do a lot more extra workings. So luckily, we were given both of them in this question. So this is where we started. We entered the additions. We are following this timeline over here. We started over here. We had the balance brought downs given here. We moved on to 1st of October. We recorded the additions. We moved on to 31st of March. We recorded the transfer entries first. And then we moved on to the 30th of June. वहाँ पर पहुँच कर यहाँ पे 30th of June पे पहुँच के आपको पहले depreciation charge calculate करना है और फिर closure करना है, फिर accounts close down करने हैं. So that is the summary of our entire procedure. So if you understand, please give me a green check and then I'll do part D. Excellent. So now we move on to part D. We'll do part D over here. Part D says that we have to show the extracts. Basically, it means that how we are going to show these values, whatever values we have produced in our ledger here, right? Out of all of these values here, these three accounts, which value affect your income statement and which values will affect your balance sheet. So the income statement charges are straightforward. We can detect two income statement charges, one here, the other one here. And both of them are representing your expenses. So we are going to show them here just like that. So we write income statement extract for the year ended 30th of June 20x8, right? That's our income statement date. And we are going to show a hypothetical gross profit here because we know the expenses section is where these two are going to be shown. So that's our usual two columns. So you can put XXXS over here, assuming whatever the gross profit came in that year, you will show the less expenses section. And expenses list mein, you are going to show depreciation for the year, which is this value here, 5396, right? So this value 53696 is our current year's depreciation. So we are going to show it here as an expense. And we are also going to show loss on disposal, which was 360. And that's how this loss on disposal here. This was also transferred to the income statement. So this 360 comes here. So we understand the income statement extract. Please give me a green check. We already know this. We have been making full length income statement, and extract shouldn't be a problem for us. So we should know, we should have already known this part, right? And part E is where we are going to show the balance sheet extracts. The balance sheet extract, let me just draw a line. Balance sheet extract for the year. Not for the year. Balance sheet is never made for the year. Balance sheet is always as at 30th of June 20x8, and we know how we produce the balance sheet. We have our three columns here, the non-current assets section, right? We have the cost column, we have the accumulated depreciation column, and we have the net book value column. So we're going to show vehicles, right? So the balance carried down in each account, right? Whenever you find a balance in any account, that is what is going to go to your balance sheet. These two are going to go to your balance sheet here, 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 here in दोनों में, right? So we have $184,000 here, and we have 103,456 here, and whatever the net book value comes out. So we understand the balance sheet extract. Give me a green check, final green check, and we'll call it off. Misha, we understand better? Good. So this is the complete question. 9.6 is an identical twin, right? It's actually easier because you don't even have reducing balance method. You have the original cost method or the straight line method. So straight line is original cost method, right? So 9.6 is what I will post as your assignment. And I am also going to post these notes as PDF on class notes. And I am also going to put this recording there too, in case if you want to see it again. Okay? So stay back if you need to ask a question. Otherwise, you go. Thank you, Asma. Elena, thank you.